Imagine waking up and seeing six-figure Bitcoin prices as new, boring middle of the chart. Now, picture BTC vaulting from that sleepy 100K all the way up to $230,000 before your next coffee refill. Sounds wild, right? Well, stay with me because by the end of this story, you're going to understand why that leap might be less Moonboy hype and more mathematical gravity pulling that orange coin exactly where it wants to go. Okay, so here is the deal. Now, this might just shock you, but I am not a financial advisor and nothing in this video is financial advice. Cryptocurrencies, they are highly volatile and you could lose all the money that you invest. You should always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that there is nothing that is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses, and this video right here is for entertainment and educational purposes only. Okay, so that's your legal kind of seatbelt fastened. Let's hit the gas. Okay, so picture me last Friday night, stainless steel espresso cup in one hand, phone in the other, doom scrolling the latest Musk versus, Trump X thread, and suddenly my price alert screeched. Bitcoin slipped to a hair above $100,000, a 6% flush in just minutes. Now my brain did that kind of cartoon double take. Wait, was the top already in? Now, did the Musk lightning meme finally kind of jinx us all? And before kind of the caffeine fully kicked in, greedy kind of green candles roared back. Liquidity, I should say liquidating all of those kind of short positions so hard that it looks like a Black Friday door buster at the Best Buy. Now, by sunrise, Bitcoin was not just fine, it was flexing harder than ever. And Bitwise's fresh report landed on my desk like a big mic drop. Fair value for BTC, try $230,000. Now, fair value is one of those kind of phrases that analysts love to toss around like confetti. It sounds precise, almost surgical, but inside kind of it's equal to kind of parts data science, PhD optimism, and a sprinkle of pixie dust, if you will. But when Bitwise researcher, and researchers Andre, Dragos, and others, they dropped that kind of 230 number. They weren't, just waving a magical wand here. They were crunching trillion-dollar problems, right? US sovereign debt ballooning faster than my DoorDash bills during lockdown, interest payment forecast to triple to $3 trillion by 2030, and a proposed One Big Beautiful Bill Act that slashes taxes yet somehow spends like a caffeinated toddler in a Lego store. It sounds fiscally zen to you? Well, I didn't think so. And then here is where it gets juicy. Now, throughout history, markets have leaned on gold, real estate, even barrels of crude to kind of hedge against government chef, if you will. But none of these, at least those, can actually teleport value across the internet in under 10 minutes flat, right? It's Bitcoin, fixed 21 million coin supply and borderless nature makes it, well, digital kind of cockroach resilient. Now, the kind of nastier the macro mess, the kind of shinier that the orange kind of exoskeleton looks. Now, Bitwise's thesis is actually quite simple. If Uncle Sam keeps, lighting budget bonfires, capital will sprint, towards hard, scarce, apolitical kind of assets, right? And they ran the numbers and said, look, if these kind of debt deficit trajectories don't U-turn, then $200,000 Bitcoin this calendar year, it is not fantasy. It's a middle lane projection. And $230,000? Well, that's the price gravity, once the market price is in sovereign stress plus renewed risk appetite. Now, I know what you are going to be thinking. Predictions like this have dashed more hopes than my New Year's gym memberships. Remember Plan B's stock to flow model that forecasted $288,000 by 2021? Cute, right? But Bitwise isn't a lone voice in the desert, right? A separate study by Stock Money Lizards fired off with, an optimized trend tracker, a pretty big mouthful, but let's just call it OTT signal. Now, last time that the OTT flashed mid-2024, Bitcoin ripped from kind of mid-30s range to six figures in under 8 months. It's the on-chain equivalent of that kind of glowing green button in every kind of sci-fi movie that screams engage, warp, drive. So when OTT lights up, hodlers historically buckle up. Okay, so let's zoom out, and a kind of power law regression, basically the kind of nerd graph that kind of nails Bitcoin's macro tops and bottoms for the last 14 years, also points to $200,000 by December 31st, right? And, Matt Hogan, Bitwise's own chief investment officer, doubled down. Institutional demand is a kind of freight train. Supply is halved, so math meets scarcity meets FOMO. Sprinkle in some kind of reflective psychology, and higher prices beget headlines. Headlines lure in sidelined cash, and sidelined cash drives higher prices, and you've kind of got a self-feeding rocket plume. But let me rewind and give some kind of flesh and blood flavor here, because 2 summers ago I attended a barbecue where my cousin, total crypto skeptic, cornered me between the kind of, guck and the grill and explained the Bitcoin to me in 10 words, he said. Now, I panicked, stuttered about kind of, digital scarcity, and then kind of my burger, charred, and that moment kind of passed. Now this year, the same cousin texted me, how do I buy sats before the election? And folks, when relatives who still kind of write checks start eyeballing self-custody, you're not early, but you're not late either. You're kind of smack in the middle of the narrative crossing the chasm. But let's do a quick pit stop here, because if you're feeling a little bit lost in all of the weeds, you need to hop into our free educational Discord server. There's a link in the description down below. We share charts, explainers, and the occasional meme contest. There's no paywall for the general chat. It's kind of like office hours, but with way more gifts. Okay, so let's get back to that macro hurricane then, right? The Congressional Budget Office kind of projects Washington will burn through cash so fast that net interest eats 27% of every federal dollar by 2030. Now that's kind of like playing a monstrous credit card bill, or paying a monstrous credit card bill before you even touch the rent, groceries, or even the Netflix subscription, right? Markets smell that fear, and historically, when trusting the dollar feels dicey, gold spikes. But Gen Z and millennials can't Venmo a bar of gold, so they kind of chase the next best, finite asset, hence Bitcoin's expanding digital gold narrative. So let me sprinkle some stats, should say stats, on the kind of stake here, right? Because according to Glassnode, the kind of percent of BTC dormant for a year plus, so-called HODL waves if you will, hovered around 68% right before that kind of Musk tweet spat. So what's the translation there? Well, 2/3 of the supply is in diamond hands, ignoring kind of every red candle, if you will. Now that liquidity amplifies upside, when demand surges. So just because, that kind of free bloat is a kind of slither, if you will. Now, if you mess around with basic supply and demand curves, and you can quickly discover price elasticity turns into price whiplash. And speaking of demand, BlackRock, Fidelity, and ARK Invest collectively hoovered up $9 billion into spot Bitcoin ETFs within 5 months of their launch. And guess what? We haven't even seen, sovereign wealth funds or university kind of endowments, unleash their kind of checkbooks just yet. So let's just think of the current inflows as the appetizer tray. The main course hasn't even hit the table. All right. Let's kind of ride the timeline then, right? Bitwise's roadmap kind of shows 3 legs. Leg 1 is the sovereign stress trade, right? Playing out right now. Political talk of trillion-dollar deficits and tax cut promises. Leg 2, that's the mid to late Q3, is the liquidity wave, when central banks, ironically, trying to kind of cushion slowdowns, juice markets, sending risk assets into orbit. Then you've got leg 3, that's Q4. Now this is kind of the institutional kind of chase phase, right? Pension funds realize that they're underweight digital assets after Bitcoin kind of breaches old highs, but they kind of buy into momentum. And each leg, of course, compounds the next, like dominoes kind of dipping in rocket fuel. But hold your horses, because every narrative has potholes, right? If the US Congress suddenly passes an, different kind of plan, maybe Bruce Banner style, or if regulators maybe, strange kind of strangle crypto, I should say, kind of banking rails, well, sentiment could actually ice over faster than a Canadian pond in January. And ironically, if the economy kind of prints, blistering growth numbers without debt headaches, well, Bitcoin could actually cool down because fear evaporates. And that is why managing risk is job number 1, right? Personally, I allocate like I'm packing for an unpredictable weather, right? A base layer of cold, hard fiat for bills, a jacket for kind of broad market ETFs, and then a bright orange scarf of Bitcoin exposure sized, so that I can sleep even if volatility yeets the price 40% on a random Wednesday. And speaking of yeeting, let me kind of confess a recent facepalm moment. When Bitcoin flirted with 100K, I kind of brag tweeted a laser-eyed selfie, minus a few minutes later, that 6% kind of Musk tweet drop nuked my timing. Now, people roasted me in the replies like marshmallows, right? Yet the rebound validated why you can't just trade the headlines, right? You have to trade conviction plus good risk practices. And conviction, it doesn't actually sprout out of thin air. It kind of actually forms when you see data such as the average on-chain cost basis sitting around 92K, meaning that a 100K dip is literally kissing aggregate long-term holders break even. Historically, it's a bounce zone. Or when you maybe read that kind of miners currently daily issuance post-halving is roughly 1/4 of ETF daily demands. It's kind of like trying to fill a swimming pool with a garden hose when someone drills a hole in the bottom. It kind of just might splash, but ultimately it will actually just drain overall, and it will drain the wins. So, by the way, if you're hunting for a reliable trading venue, then I want to tell you about Blofin, the crypto exchange that I use. Right, full disclosure, of course, the link in the description down below is an affiliate link that supports the channel at no cost to yourself. Right, they've got deep liquidity, robust security, and an interface that is smoother than my espresso creamer. And if you sign up through our link, then the algorithms will throw a tip our way, which helps us keep the kind of midnight research binges going. Okay, let's pivot to a storyline that I love then. Trump's One Big Beautiful Bill Act, right? Critics kind of call it the kind of deficit gasoline. Supporters say it's kind of growth octane. Either way, markets crave clarity. Now, if enacted, the bill expands the deficit hole, making Bitcoin's scarcity shine even brighter. Last week's kind of Musk's jabs were basically the market's dress rehearsal. We saw a reflective kind of spike in volatility, and then the bulls stampeded back once fear priced it in. Now, that kind of rubber band effect is textbook constructive backdrop, as kind of Bitwise puts it. Add in another lens, the presidential cycle. Historically, the 15-month kind of preceding an electoral kind of shower, if you will, risk assets with liquidity sugar, incumbents, want voters feeling wealthy, right? So if that pattern repeats itself, Bitcoin's tip towards 200K could align with policymakers juicing markets, not frightening them. But before you go ahead and picture yacht shopping at kind of 230K Bitcoin, remember power law models cut both ways, right? They suggest deep drawdowns too. So in 2022, we nuked 77% peak to trough. Now, could we retest 6 figures, puke to 80K, and still finish at 200K? Absolutely. Bitcoin's path is a kind of seismic kind of movement. It's definitely not a ruler where it goes in one line, one straight line. So let me illustrate with a personal oops moment, right? Back in 2018, I set a stop loss of $5,800 right before the bear market bottomed at $3,200. I capitulated near the lows, bought back higher, and learned the Max Payne rule the hard way. So nowadays, I separate trading capital from conviction buckets, right? My conviction bucket is cold stored, two-factored, and basically untouchable unless aliens steal the moon. My trading bucket, on the other hand, that's my sandbox for, adrenaline fixes. And if you are new, there's no shame in dipping your toes with $10 until you can navigate the kind of gas fees, right? Private keys and market cycles without heart palpitations. And our Discord has beginner room walkthroughs, wallets, step by step, all free, so you can take advantage of the hive mind. All right, narrative climax time. Just imagine it's December 28th. CNBC's talking heads are doing the annual Santa rally segment. The kind of lower third graphic flashes Bitcoin tops $200,420. Viewers spit out kind of eggnog, clips go viral. The next morning, analysts scrambled to adjust the year ahead forecast. Suddenly 230K isn't a moonshot, it's the next magnet. ETFs chew up whatever coins appear on order books, exchanges feel like Black Friday carts, and that's kind of the feedback loop that Bitwise's models kind of show spiraling upwards. Scarcity, stress hedge, and supply shock all synchronized. But you must watch the horizon. If policymakers hint at balance sheet budgets or even ETF flow plateaus, well, that momentum could stall. Markets climb stairs, descend elevators. So set alarms. Don't just tie your happiness to green numbers every single hour. And Bitcoin is both a sprint and a marathon, right? Usain Bolt wearing marathon shoes. Now, before I wrap up, let's recap some of the key takeaways, like a rapid fire bullet train. Bitwise analysts peg BTC's fair value at $230,000, anchored to US debt trauma and scarcity math. Trump's proposed tax cut bill supercharges deficit fears, adding rocket fuel to the hedge narrative. Optimized trend tracker and, power law models independently flash green towards 200K this cycle. Institutional demand is an iceberg. Spot ETFs are just the visible tip. And risk remains. Policy pivots, regulatory clamps, or liquidity shocks can derail all of these projections. Manage exposure, keep long-term convictions separate from the dopamine trades, and never mortgage sanity for volatility. And if you hit that kind of double shot of espresso, make sure to smash that subscribe button and consider hopping into the next video.